Good morning, everyone. Welcome to our Monday morning trading session. I trust everybody had a nice, relaxing weekend and you're all ready to go. Yeah, I know, me neither. All right. Weekend was a little bit busier than I had hoped, but oh well. What else is new? Okay, so this is the NASDAQ that you're looking at here. I've also got soybeans and crude oil up this morning, but I can take a look at any market which is of interest to you. You can see the overnight kind of continuing from where the market left off Friday. Here was Friday's session, a big run up, big run down, neutral by the close. The overnight pushing up back to the same highs, which kind of suggests a bit of a double top. Now we're here at the bottom, and the big question will be, is this going to be a trading range, or are we actually going to see prices break down below here? No signal on the Eagle just yet. We did get a macro pullback / 4-arrow consolidation right here, just off the opening buzzer. But right now, just kind of in a bit of a holding pattern. So we'll try to give them a few minutes to get their bearings. Okay, we are going to get a signal here on the Eagle. And let's see, just can I cover it that high? No, I can't. So if I'm going to try for this signal, I'm going to have to take a chance and try to cover somewhere here in the middle. Of course, you can always wait for the market to break out and then retest. So this is a much riskier proposition. And I'm anticipating, you can see we've got the warning dot triangle there. So here we've got our order. And now we're going to see whether or not the sellers can actually push the market through these lows and stay below those lows. Okay. Trying to creep lower. We're also right on this support line here. Of course, these support and resistance lines, if the market is trending lower, the support should not hold the market that much, obviously. But what we would be looking for is on the retracement, we would be looking for the support to now act as resistance. So in this instance, if we do get a little bit of a bounce here and we see prices trading up and you're using your support and resistance suite, you could see something around the 47, 96, 97 area as plausible resistance that might turn the market lower still. It's only a few minutes into the session, so I'll try not to get too crazy loading up, but it does look as though the sellers tried to make a push lower. Here come the buyers now trying to push back. Come on, bears, where'd you go? Here's crude oil now on the hawk. You can see we got almost the same kind of thing going on here on a smaller scale, where we've had a little bit of a double top type thing. Now we're testing the bottom end. This is another market that may actually be working itself into a sideways trading range, like so. By the way, this is a first micro macro cross signal to short. Hash mark's going to print right here. However, the lows are just a couple ticks further. I would probably suggest going below there, but you can see the problem with trading crude oil, or at least the problem I have trading crude oil. It's really, really difficult to cover that trade above any kind of reasonable resistance area. So, at least at my current risk amount, trade manager saying, sorry, Eric, can't do it. Okay. It's almost time to start squeezing these sellers. Let's see here on the Raptor. Yeah, they've almost recovered the open. Let's see, the market opened up here, came down. They've pretty much recovered everything. So I think I'm going to opt for a tighter stop here. $48.60. All right, we'll go with that. So last chance for the sellers to get their act together. Come on. No, they're gonna rally the market here in just a second. We're gonna see them try to breach the 4,800 level. The eagle is one of the few tools, however, that I will take an early signal on. By and large, you're better off waiting for the market to get a little bit more structure to it. But the thing with the summer, of course, because the sessions are a little bit slower, sometimes you see the first move being the best move, or the move of the day. Okay, the Raptor about to print a conflicting signal here. So we're currently short on the Eagle. By the way, if you did take this Raptor signal out of the open, there was enough in here that you could have scalped out or swung out with some profit. But we're about to produce a counter trend signal here with the Raptor, a soft edge buy signal. Now this is equally as risky as the sell signal that we took, because I'm almost thinking this market's going to be moving sideways. But the signal's the signal, so we've had the retest of the low. Okay. Here's been our retest. Oops. Okay, so there's the retest right there. And now we're looking for the buy signal to develop. That would be our soft edge buy, even though we are well past the soft edge so far. Remember, too, when you're taking a counter trend signal, which is what the soft edge signal is, it's a reversal signal, you have to trend beforehand, right? If it's all choppy and sideways beforehand, there's no soft edge buy or soft edge sell. You have to have a trend first, then you have to have a failure second, and then you have your sell signal. That's how you can tell that's going to be reliable. Or more reliable. All right, lots of yellow bars going on here on the hawk. That's a sideways kind of market. We've already got the trend change signal here in the Falcon. Right, so the Falcon trend change signal, again, you have to have a trend first before you can have a trend change signal. The trend line goes from red to green. Here's the up part that changed the trend line color. Here's the down. Here's the up. There's the buy signal. And now we're coming back with another buy signal. Now notice excuse me, buy signals right here. The high, one tick further. So perhaps I would give up 2 ticks, or given that my stops are around 4,800, maybe I'll even give up 3 ticks, seeing how 4,800 seems to be a number that the market is liking. In fact, I may do like a reversal type thing. So 40.75. There we go. This signal right here that just produced is a late filter entry signal. Note the filter goes out of sync, came back into sync. This tends to be a fairly reliable signal also. Now I'm going to, because this is the first trade and because I'm only running a single, I'm going to try to run this one out, just in case the market's going to make a break higher. Here the hawk, also producing a first micro-macro cross signal now. We just have the warning dot. It would pretty much look the same as our Falcon trade. And the Raptor did produce a soft edge buy signal right here. And like the Falcon trade, you'll want to cover it below the lows. And we're into the hard edge, which could be problematic, but if in fact we are moving into a sideways type of day, traders are going to try to find the top end of this trading range. Hope, unless 4,800 is the top end, hopefully it's not. Before I forget, this week I've committed to helping someone with a project, and it happens to be out of town. So we're going to be closing the trading room a little bit earlier than normal this week. We're going to be closing it at the bottom of the hour, and I do apologize for any inconvenience. Markets are kind of slow though, so it seems like whatever move is coming our way does tend to come within that first hour's trading. A lot of waffling going on here. Neither the buyers nor sellers seem to be able to get a grip on the market. Hopefully I wasn't a little bit too quick to give up on the sellers here. All right. We've actually now reversed the signal here in the Raptor in a way. You could see this as a double pullback signal. It hasn't engaged just yet. Oh, I guess actually it has engaged just by the one tick. So the market really conflicted this morning. right, here we go. All right, one more push to the bull side. We're still trying to find that top end. The market is. Well, what can I say? The market's sideways. No, doggone it, here they come again. All right, time to adjust the stops again. If they start to fail and they get back down below this 47.94 area, then there's probably a pretty good chance that the market will try to head lower. So much for running the market out without my profit target. Good question, Paul. Paul asks, Eric, did it concern you that you were going into the hard edge on the eagle? Yes, it did, Paul. Because, of course, every time we hit the hard edge of the eagle, we're anticipating some sort of reaction. I was hoping that maybe it would slide through a little bit, seeing how we hadn't really had a proper retest of this high, although a case can be made that this high is actually a retest of this high. This low is a retest of this low, so the market's poised really to head higher or lower from here. But no, that was a concern. And it was early, too. As I said, there's not a whole lot of, well, there's a little bit more structure to the market now. Opening range has since expired, but sometimes you pays your nickels, you takes your chances. That's why we use the risk manager portion here of the trade manager, so that if I did get the trade wrong, well, at least I haven't lost more than I can afford. All right. Well, it looks like we're going to get another reversal signal here in a moment. You can see the Raptor already stacking up to short. We've got our double pullback signal now confirmed. We are making a lower high relative to this one. Come on. Oh gosh, I'd like to get at least one decent trade going here before we close the room up today. It's crazy. Right now it's a 50-50 type trade. The market is so neutral that it can quite literally go higher or lower. There's no bias to this market anymore, I would say. And the reason that is because of all these yellow bars, because this trading range that we really haven't emerged from since the start of the session. Good question, Paul. Paul asks, would you consider getting to break even as soon as possible if you're able to get out? I would probably leave my break-even trigger where it is. The market is going to break one way today, either higher or lower. It may not be a very protracted breakout. But there we go. We're getting a little bit of a push to the upside. And when they finally commit, we should see a little bit of follow through here. All right, so we've hit the break-even trigger. Come on, don't stall now, you stinkers. Again, that's one reason that I really think the trade manager with the risk manager component is so important, because it allows you to trade level-headed. You know, you're not panicking because all of a sudden, oh, I got a chance to get the trade to break even. Well, even if this trade had tanked on me, remember my initial risk. Where in the world did I even get into this trade? It's been so long. I think my initial trade was set up like this, and then the market came down, and then when it kept floundering here, and at this point I started thinking, all right, well, the sellers, or pardon me, the buyers have recommitted to trying to buy the market, right? We're holding this whole support zone around 47.94. And they were floundering a little bit here, and I thought, oh, great, they're going to fail. They're going to try to head lower. I may as well take the early stop out, right? If they stop me out, or if they break below here, they're very likely going to try to make a run at the lows. So even though my initial risk was set at 2%, if I had gotten stopped out here, it would have probably been about half, right? It looks like about half of my initial risk. So in other words, I would have lost 1% of my trading capital. So if you're trading, say, a $10,000 account, that would be $100. That's not going to ruin your account. The trades that are going to ruin your account are when you're over leveraged, when you're trying to put on a trade and you're risking, say on a $10,000 account, you've got $600 or $700 at risk. And I see people doing this all the time. Well, obviously you don't need to incur too many losses like that for that to put a serious dent in your trading capital. If if you're risking $600 or $700 at a time and you take two stinkers in a row, well, all of a sudden, you've lost 10% or more of your trading capital. So instead of trading $10,000, now you're trading $8,700. That's a stinger. Even if I lose my full amount, twice in a row. I'm down $500 on a $10,000 account. That's still, it's unpleasant to be sure, but it barely scratches the surface. So I think that's why it's so important to contain your risk. It helps you stay level-headed about a trade so that when the market does make a move like this, you can say, all right, we were able to ride out the move. Time to get a little bit more aggressive with our stops. The market, almost without exception, will make a reasonably strong move one way and then try to reverse on that move later. So that's something that you can always be on the lookout for. The market trying to make a move higher or lower. This is obviously going to be the move higher. And then from here, once it finally tops out, depending on how strong the sellers are, it will either end up in a sideways range, or there will be a couple of smaller attempts to move the market lower. The problem with trying to get the trade to break even as quickly as possible on a trade like this is sometimes the market will look back one more time. Look back one more time, tag you at break even, and then take off. And that's not a bad thing. Break even is not a loss. So if that happens to you, you shouldn't get too terribly upset. But of course, the objective of the whole exercise is not to end up with a break even, rather to end up in a profitable position. So it's difficult. But I find, as I said, the trade manager takes a lot of the pressure off. And I may actually even squeeze this trade pretty tight. Just give it a couple of bars. There we go. That's all you get. And we'll just hang with this trade a little bit longer. I suspect this is going to be the move of the day. Oh, well, they were able to ride that one out. Buyer's not done yet. The bull's pushing very, very hard here. It's going to be a nice little trade for us. Yeah, we got some pretty serious open profit there. Come on, keep going. All right, well, we're going to get stopped here in a moment as it looks like we've traded back to the overnight highs. See that? So it does appear as though we do have a great big trading range in effect for today. And come on, you're going to tag me here in a sec. Yeah, Andrew says, I stepped away as the market just was not moving and come back to see you in a picture-perfect position. That's the thing about this time of the year. The market's just kind of a snooze fest, and then it will break, and that's pretty much going to be the move of the day. All right, you guys, we're going to button up the room here. Again, my apologies. I do have commitment this week outside of the trading room. But if you are going to continue this afternoon, look for a little bit of a reversal here. As I said, the market does tend to make two pronounced moves during the day, one higher, one lower. We don't always know which one's going to be which. But obviously, this is the up portion. Whether the sellers are going to push back as hard remains to be seen, or maybe this market's just going to enter a little bit of a sideways phase, which is also possible. All right, well, we'll catch you again tomorrow morning, same time, same station, as they say, and we'll look for another strong move. We'll talk to you soon. Bye for now.